a new software. It is called Live Stream. Pretty darn cool. It allows us to put the logo in the upper right-hand side, the Rebel Capitalist logo with the Atlas Shrug guy right there. And very interesting. This is kind of a cool format. I'm just kind of looking around, just using it myself for the first time. The one thing, Sebastian, I know you can hear me. It says, oh, it's 68 people watching. I'm not sure that's right, but anyway, it seems like we've got a lot more people in the chat than that. But that doesn't matter. Okay, we got to get into the chats. I know I've been going long lately, so I'm going to dive into them as soon as I can. As far as some house cleaning, just want to remind everyone, if you're interested in Marin KATUSA's newsletter, today is the last day of the promotion. When I have Marin on, his guys generally drop the price for us for 1 week. So that ends tonight at like right around midnight, 11:59, whatever you want to call it. So if you're interested in Marin's newsletter, definitely take advantage of that today. If you're not interested in a newsletter, if it's not right for you, I don't think you should really explore it. And to be clear, do not buy a newsletter, any newsletter, I don't care what it is, just to get stock picks. I think that's a really, really bad idea. I think you should buy a newsletter to be your employee and to do the boots on the ground research that you don't have time for. But at the end of the day, you should make your own decisions, just like an employee that you would hire to do research for you. So I dove into that extensively last week, so I won't go into it any further. But if you're interested in Marin KATUSA and KATUSA research, definitely check out the link. We'll put it in the description of this video, or you can go to georgegammon.com and check on the resources tab, and you can see an affiliate link there as well. Okay. And let's go ahead and dive into the super chat so I don't get backed up this time. And we're trying a new format here. So I think you can all see the question on the screen. I'm reading it right off the screen, so I don't have Sebastian texting them to me in real time. Can you guys see that? I think I'm trying to read the stream. I think the stream might be a little slower, Sebastian, than the YouTube stream. Yeah. Oh, yeah, we can see it. Okay. So interdimensional lizard. Very cool. It says, yes, we can see it. Fareed says, yes. 5-5 Frontier. Yes, we can. Yes, we can. Okay, cool. Awesome. Okay, let's dive right in. E-Money, thank you for the super chat. Says, thoughts on onegold.com. Blockchain recorded one-on-one full gold ownership of gold, silver, insured, audited, stored U.S. Canadian Mint, backed by Atmex and Sprott. I think it really depends on what you're trying to use it for. So if it's the insurance side of your portfolio, I prefer physical in my back pocket, or just somewhere that's around me that I can get to. I know that might not work if you've got $1 million worth of gold. You might not want to bury it in your backyard. you might want to have some storage, but and then you might consider a product like this. I don't know much about it. If it sounds great, if it's stored at the Canadian Mint. I don't really like too much at the Perth Mint, just because Australia's confiscated gold in the past, but it seems pretty good. But I just, to be clear, I like the physical in my back pocket the best. And then as far as a speculation, I like the gold miners and the silver miners a little bit better than I like. And in fact, I like physical silver a little bit better than I like gold right now for a speculation. Right? Just to be clear, remember there's 2 sides or 3 sides of the portfolio. But I think those are my thoughts there. And it sounds like I need to do a little research on it, because it looks like it could be pretty interesting. Okay. Oh, and Sebastian put it right up here. This is a really cool software. where I like this. This is really, really neat. Okay, Ike, thanks for the super chat. Why say the dollar will go up when evidence shows Fed will do anything to support the global economy? Nations can survive debt with other money. Oh, nations can't service debt with other money, as in their currency. I think it's too obvious. A reverse Gresham's law is imminent. More swap lines can be opened. I think the argument for the DXY going to 120, 130 is the transfer mechanisms the Fed has at their disposal to get dollars into the system in and outside of the United States just aren't going to work. Or said another way, they're not going to work well enough to keep the dollar from going up. Now, I personally agree. I think the Fed will change the rules. I think they'll ignore the rules. And I think if we look back over the last couple months, it should be obvious to anyone that has dismissed what they say and focused on what they do that the rules just don't matter anymore. The laws don't matter. The Federal Reserve Act, it just doesn't even exist. It's like the Constitution right now in the United States. Unfortunately, people just ignore it, at least the politicians. So I think, to your point, that if the dollar does go up to, let's say, 110 on the DXY, that they'll somehow intervene to artificially bring it lower. And I just think that the guys who argue that it's going to 130, 140 think that it'll get to 140 prior to the Fed figuring out, or the government figuring out, how to artificially drop it. I think so. It's really a matter of timing. I don't think it's a matter of what's actually going to play out long term. Happy Mother's Day. Yes. Hi, Jay Kane. Yes, thank you. Happy Mother's Day to all the moms out there. Creating the Dragon portfolio. I didn't see an allocation for cash. So in retirement fund of 200K, what percentage of cash would you set on the side? None, question mark. Okay, so let's unpack this a little bit. First of all, Chris's portfolio is what he would call a 100-year portfolio. So if you had to invest your 200,000 retirement fund and you couldn't touch it for 100 years, 100 years, would you want cash there? Nope. You would definitely not want fiat currency if you couldn't pull out that money for the next 100 years, because most likely the fiat currency, whichever one you choose, probably won't buy too much in 100 years. So, but does that mean that right now in our current environment, you should have 100% of your, you should be all in as far as your portfolio and have no cash? I don't think that's prudent either, because if you look at Chris's report, which I would strongly suggest everyone reading. It's 40 pages, but the meat of it is only 20 pages. You can read it just during a lunch break or something. It's really easy reading. It's just a phenomenal report. But if you go through there, you see that we're most likely going into a hawk type of cycle. And so if you believe we're going into a hawk type cycle, you could set up your portfolio so it's less dragonish, if you will, and more hawkish, just to benefit from what may happen in the shorter term. And when I mean short term, I don't mean the next month or two. I mean the next 5 years or the next 10 years. Because you're looking at a 100-year portfolio, a decade is actually a short period of time. So my point there is you've got to make sure that you understand the timing of what someone is talking about. And you don't want to, that's a huge mistake I see people make all the time, where they take something that, like Chris is talking about, that he's that's meant to be applied for a 100-year time frame, and they try to apply it to a 1-year time frame. They say, well, this doesn't match up. So again, timing is everything, and your time frame and your time horizon. So going back to your main question here, what percentage do you set aside in cash? If it were me and what I'm doing, I would like to see, I'd probably do 50%, 30%. I would definitely want some dry powder, because I think there's a good probability, or a high probability, that we could go back down and experience, either go back to the low we saw in March or go down even further, because I think unfortunately, we'll probably have a second wave of the virus, maybe a third wave. And I don't think the market is prepared for that, just like they weren't prepared for the first wave. And you always get these big retracements in a bear market rally. So I'd want to keep some additional dry powder, but I'd want to overlay that with the Dragon portfolio and ask myself how I can maybe start to transition what I'm doing to think about the asset classes I have in my portfolio in those terms. And if you guys watched the video I did Friday on the Dragon portfolio, I'm actually doing another video tomorrow that I'm going to try to keep it short, under 10 minutes, so it's easy to watch and isn't too, it's not going to strain your brain too much. It's not going to be something on the euro dollar market. Just keep it super simple, super fast, but give you guys ideas on how you might be able to build a more Dragon-like portfolio, because the big hurdle most people have is going long volatility. Like, how do you do that? If you don't have $100,000, or you're not an accredited investor where you can just have Chris's fund do it for you, and you don't really know options that well, how do you do it? If you go into one of these funds that tries to go long, or that you can buy on the, just through your brokerage account. I'm not sure what the ticker symbols are. I'll go over them in the videos tomorrow. The problem with those is they're just like the USO, where they have a negative carry. So if you hold this long volatility instrument over 10 years and we don't see a huge spike in volatility, you're going to lose everything. You're going to lose that portion of your portfolio. So Chris does it in a way where there's actual positive carry. I'm thinking that's probably out of the grasp of the everyday person. So I'm trying to come up with ideas with things that would benefit if we have volatility, regardless of whether that hawk cycle is a deflationary hawk cycle or an inflationary hawk cycle. Remember, in his paper, he says the left wing of the hawk is deflationary. The right wing is inflationary. So do you have a 1930s? Do you have a 1970s? I know on the channel I've argued for both. So if you're long volatility and you do this commodities trend following, you're able to maximize on whichever hawk cycle we go through. So I'm going to try to address that on tomorrow's video. Yanni, thanks for the super chat. Hello, George. Which of the comunas or neighborhoods in or around Medellin, Colombia, would you pick to invest in apartment? Poblado, Laureles, Belen, Envigado, Sabaneta. Would you also consider buying real estate in Cartagena? I can only tell you what I would do. There's really no right or wrong here, Yanni, because it depends on what your objectives are. For me, I like liquidity. I like to have an asset that I can sell as quickly as possible. And remember, here there's not as much liquidity, nowhere near the liquidity that you have in the United States or in some of the developed countries where a big portion of the housing market is leverage or debt. Here you have very little debt. So since very few people can get bank loans to buy a house, most people own them outright. They don't have to sell. So in other words, less liquidity. So Poblado is where I focus, and I don't even focus in Poblado. I focus in little teeny sections of Poblado, an area called Provenza. And I like to buy within walking distance of the financial district, which we call the Golden Mile, or Parque which is kind of the big tourist spot here in Poblado. That's where I like to be, because you're going to rent them a heck of a lot faster and you're going to sell them a heck of a lot faster. And when I mean sell a lot faster, I mean 6 months compared to like a year. Don't make it seem like, I don't want it to seem like you can sell it in like 3 days like you can in the United States. That's most likely not going to happen here. But it gives you more liquidity. So that's why I like focusing. And then see what the rebuttal that most people have is, yeah, George, but everything in Poblado is overpriced, and I'd rather go to Laureles or Envigado where I've got more upside appreciation. But those people don't know how to buy. No offense if you're one of those people, but they don't know how to buy. They don't, there's so much insider knowledge that you have to do well in a market like Medellin that's completely inefficient, and you have to use those inefficiencies to your advantage. And if you don't know what you're doing, you're going to get smoked. You really setting yourself up for problems. But if you know what you're doing, I can buy just as cheap in Poblado and in Provenza as most people can in Laureles or Envigado on a price per square meter. So I guess the takeaway is, if you know what you're doing, if you value liquidity like I do, and you really want to maximize on your returns, you got to go with Poblado and specific areas in Poblado. And then, Sebastian, you changed it on me. Oh, there you go. Good. You can go back. Oh, this software is really, really cool. As far as Cartagena, I really like Cartagena, but it's a lot more expensive. When you go into Bogota in Cartagena, you're probably looking at 2,000 a square meter, 2,000 USD a square meter at a minimum, probably higher than that. Now, you may be able to get some deals because of the cerveza sickness. So that's what I'd look into right now. But where in Medellin, you're looking at maybe 1,500, maybe 1,200, something like that, as far as a price per square meter. All right, Sebastian, now go ahead and change it. Zoomer, thank you for the super chat. Hi, George. Can you interview Kevin O'Leary, Mark Cuban, Mark Hayes, Ray Dalio? Ray believes printing money is the solution. I don't know if I'd go that far. He tries to call it the beautiful deleveraging, where you can kind of walk a tightrope with money printing and the debt deflation. And I don't know if he'd just go outright and say money printing's the solution. It's far more nuanced than that. I would love to interview Ray. As far as Kevin O'Leary or Mark Cuban, I don't know. I think it might be fun, but I'd much rather interview Ray Dalio or like Hugh Hendry. Like, I'd way rather interview Hugh Hendry than Mark Cuban, even though a lot fewer people know about Hugh, or even Lynn. I'd rather interview Lynn Alden than Kevin O'Leary or Mark Cuban, just because I don't know. I'll leave it at that. I don't I don't want to dig myself, or I don't want to put my foot in my mouth, but we'll just leave it at that. I'd rather interview people that are a little lesser known, but are really sharp when it comes to macro. Okay, Sebastian, what's our next? Do we got another super chat, or is that it? Should I go to the chat stream? All right. So I think we've got a 9. Let me try to. That's weird. We've got another super chat up here, Sebastian, but I don't know. Well, I'll let you go ahead and handle that. I don't know if there's some technical issue on your end. Well, let me go to this super chat that I see, because I don't think I've answered it yet, and then we'll wait for everything to get caught up here. Okay, J.A. Galagos. Thank you for the super chat. I'm a recent follower. Do you think the price for American housing will fall in the near future? Is it worth buying foreign properties instead? If so, where is it safe? Thanks. Okay, let me try to tackle this a few different ways. First and foremost, will American housing fall in the near future? I'm going to assume you're talking about in real terms, so adjusted for inflation. Adjusted for inflation, I do think American housing will fall. And again, what's near future? I would say in the next 5 years, we're going to see a gradual trend lower. It might not go down in nominal terms though. And so I know there's a strong argument that, hey, George, if my debt's in nominal terms, do I really care about what it's doing in real terms? At the end of the day, yes, you do. But let's just focus on adjusted for inflation, because I think that's where most people's mind should be. So I see it kind of gradually going down. I look at what happened in 2008, and that was just a blow up in the housing market. And it didn't just plummet. It didn't just fall out of bed like the stock market or the FX market or gold market or silver or something like that. It takes a long time for that ship to turn around. So the peak in the U.S. housing market before 2006, it took 6 years, 2012. So I don't see this now. I see an argument for it falling out of bed and seeing big price drops maybe in a year, but I don't think that's probable. Especially because you're getting all this debt restructuring from the government, where they say you don't have to pay your mortgage for 6 months or a year, and then let's say you get this forbearance for a year, and then it takes another year for the state to or the bank to foreclose, or maybe 6 months. These things happen very, very slowly. So I see it maybe trending lower in real terms, but not in the next 2 months, maybe just slowly over the next few years. As far as foreign properties, it depends why you're buying. If you want to use leverage, you definitely, if that's part of your strategy, you're not going to find it in foreign markets if you're an American. Whoops. Okay. So for some reason, our super chat, just bear with me 1 second here, guys. I'm sorry about that. For some reason, our super chat function is not working right now. So let me go back to JA's question on the actual live stream, on the chat stream here. Oh, right. As far as foreign properties. So if you're trying to set up the Dragon portfolio and you're looking for real estate that may perform better in a hawk cycle, or if you're looking for a way to go long volatility through real estate, I think that overseas real estate could serve the purpose. And I'm going to be going into this in greater detail tomorrow on the whiteboard video. But as an example, when you look at South America, they've gone through a history, a long history, where they've blown up the currencies. I mean, you can look at almost every single country in South America, and their currency is blown up at least once over the last 50 years. And you've got some countries like Argentina where it's a national pastime. So my point is, people, even the average Joe in South America, they don't keep their savings in a bank account like we do in the United States. They don't keep it in a 401k. They don't keep it in a portfolio of 60% stocks, 40% bonds. That's not what South Americans do. South Americans keep their money, their savings, their net worth in real estate, period. So what's interesting is, in times of extreme volatility in South America, you actually see real estate prices go up, because any cash they do have in the bank, or any liquidity they have, they immediately try to get that liquidity into real estate as quick as they can. So using Venezuela as the most recent example, maybe 6 years ago, 5 years ago, I saw what was going on in Venezuela, and I thought, maybe this is an opportunity to buy some cheap real estate. And this is before it got super, super, super bad there. It was just really, really bad. And they started the hyperinflation thing. And I saw that real estate prices in dollar terms, not in their local currency, in dollar terms, actually was more expensive. And again, the reason was because all these businesses, all these people, anyone that had any type of liquid or anything really denominated in bolivars, they tried to sell that, liquidate it as fast as they could, and get the money into real estate, whether it was commercial, whether it was residential, a home, apartment, it didn't matter. They went straight into real estate. That's like, they see real estate here the way we see bonds and the US dollar in the United States. Like, that's our safe haven play historically, is, oh my gosh, things are falling apart. Let's go into dollars, or let's go into bonds, right? It's not that way in other countries. So again, it depends on why you're buying real estate. If you're buying it just for an absolute return, then maybe you want to use some leverage. Maybe you want to look at a linear market like my buddy Jason Hartman goes into, or I've talked about several times. If you can get a good deal, I don't know if now is the perfect time to buy. You might want to wait a bit. But if you're looking to go long volatility through real estate, definitely could be something you want to look into in foreign countries like Colombia, like Argentina maybe now might have some good deals. And then Eastern Europe I'd look at. Southeastern Europe, like Croatia, if you want this denominated in euros. Montenegro, Georgia, not the state, the country. There's some interesting opportunities there. And I'm sure there's, throughout Asia and Africa, there's probably some interesting opportunities as well. But I'd look for markets where they have a history of inflating the currency, and where the average Joe and Jane uses real estate as their safe haven. Okay, let's see. Okay, so it looks like the super chats are working again on the software. So yeah, I think so. Zoomer, thank you for the super chat. Thank you for all the education. Huge fan. Now with unlimited funny money, don't you think companies like Tesla, Uber not only survive but thrive? I'm not sure I'd go so far as to say thrive. It's hard for me to envision a world where we go, let's take it back to Chris Cole. If he's right, we go into a hawk type scenario and these companies do well. If you're not making a profit and you're completely reliant upon capital markets for funding, boy, I wouldn't want to take that bet. And you see, you've got to look at the probabilities. I mean, could Tesla and Uber do well? Sure. They could do amazingly well. But does that mean that I want to go long? No. Because why would I want to go long? Well, it's because something's cheap, right? I said it, or I say it in every single one of my live streams. I say it in almost every video. I don't try to determine if the price of something is going up or down, whether it's the market, whether it's an individual stock, whether it's gold. It doesn't matter. I don't say, is the price of gold going up? I never ask myself that question. I only ask myself the question, is it cheap? And if it's cheap, I try to buy it. If it's expensive, I try to sell it. And I don't think there's any argument, any rational argument for Tesla and Uber being cheap. You may say, well, George, it's cheap because they're going to get into autonomous driving, or they're going to do this, or they're going to do that. Well, that's not my definition of cheap. My definition of cheap is where you're making a lot of money and you're trading under a 10 multiple. That I use a historic definition of cheap, not just cheap based on some things that may or may not materialize in the future. I think most of you understand that. So that's how I'd answer that. They may survive, they may thrive, but it doesn't mean that I want to buy them because they're just not cheap. Okay, Sebastian. Oh, he's got a second part of the question. Okay. Why don't you organize a seminar in Medellin for your followers on the topics of real estate investing macro? Would love to visit you there and have a 1 or 2 day like seminar deal with others. Yeah. I mean, it's a great idea. Hartman does it all the time. I mean, yeah, I may do it. I may do it in the States, though, make it easier for people. Like I might do it in Miami, like a meetup where I rent a ballroom or like a breakout room in a nice hotel and just do like 6 hours on a Saturday and 6 hours on a Sunday where we all just meet up and I have a specific topic like real estate investing. And maybe I have a couple people come in, like a couple buddies of mine, like Hartman, and we just sit there and just, I don't know how many people would show up. Maybe, I don't know, 10 people or 20 people, or I don't know, whatever. But we just go through and we just talk real estate, or we talk about macro or whatever. I think that could be a really fun. I'd enjoy that. I'd enjoy meeting people face to face. As far as doing it here in Medellin, yeah, I mean, if I had enough people that wanted to do it, I'd do it. I think it'd be a lot of fun. And there's some really awesome hotels here, and people would love coming down. It's only a 3.5 hour flight from Miami when we get the cerveza sickness behind it. So yeah, maybe I'll do it. I think it'd be a lot of fun. That's for sure. Okay, Crypto King asks, would you buy airline stocks yet? No. Number one, I don't like airline stocks. I don't think they're that great. What I like better than airline stocks are airports. So if you guys subscribe to my buddy Chris McIntosh's research, if you haven't, we're an affiliate. so check that out on georgegammon.com. It's at the recommended resources deal, the newsletters. We've got 2 up there right now. Chris, I do kind of permanently. He gives us a bit of a discount, and then once in a while they'll give us a really steep discount. And then Marin, I just do that when I interview him just for like the week time. But anyway, going through Chris's research, I think he did some very in-depth analysis on airports. And I remember when I was reading that, I was like, that's interesting. And I started looking into it myself. And some of them, the balance sheets really don't look good. But there are some airports where the balance sheets look great. So I'd probably rather look at airports right now than airline stocks themselves. Okay, Jacob, thank you for the super chat. Hi, George. Thanks for the prime content for sure. Question: my friend has most of her savings denominated in New Zealand dollars, even if not pegged to USD. How much do you think it is exposed to the strong dollar? Jacob, I haven't done a lot of research on the New Zealand dollar. I know Schiff is really bullish on it. I know the Aussie dollar took a big hit a while back, but I think it's recovered to maybe, what is it, maybe 70, something like that. As far as the New Zealand dollar, if it's cheap, I kind of like it, because I would have to look at the fundamentals, and I haven't gone into the fundamentals of New Zealand. Like, I don't know what the debt to GDP is there. I don't know really what the demographics look like. I don't know the kind of the resources the country has at their disposal. I don't, I've been to Australia a lot. I lived in Australia for a while, but I never made it over to New Zealand. Although I'd love to go there. So I don't know if I can give you any specific advice. And everything has exposure to the strong dollar. But again, I think it's your time frame. So are you asking me about the next year? In which case, yeah, I think you've got some exposure there. Or are you asking me over the next 10 years? And if the question is the next 10 years, then I think buying assets that are denominated in New Zealand dollars could be an interesting move, because I just don't see the dollar being at 100 on the DXY in 10 years. I could see it going to 120, 130 in the next year or the next 2 years for sure. But the next 10 years, I don't know. And even guys like Johnson and like Brent Johnson and Jeff Snyder and I've never interviewed Raul. I would love to. And I'm going to try to reach out to him and his guys this week. But I think even those three guys, who are probably the smartest dollar bulls that I know of, would say in 10 years, there's no way the dollar's at 100. The dollar is going to be a lot lower than that in 10 years. Okay, Sebastian, do we have another super chat, buddy? Jonathan, thank you for the super chat. Says, thank you for your honesty and straightforward data. No problem, Jonathan. I do my best. And I enjoy this just as much as you guys do. If you watched the last couple interviews I did with like Jim Rogers, Robert Kiyosaki, and Hugh Hendry, oh my gosh, did I enjoy those conversations. Man, did I enjoy that. That just made my year. Seriously, 8 months ago, I was just watching these guys on YouTube and just listening to Macro Voices and Real Vision, like all of us do. I'm just as big of a fan of these guys as you are. And to have the opportunity to sit down and talk to them, it's just amazing, especially someone like Robert. And what's interesting, if you guys didn't watch Robert's interview, I'd suggest doing so. He's going to surprise you about how much he knows about macro. He's not just the personal finance, real estate guy, cash flow quadrant, rich dad, poor dad. He knows his macro. He really does. And he's a fantastic storyteller, really a special interview. And I actually talked to him for almost 3 hours. We only recorded an hour of the conversation. But after we got done recording, he and I just went on and on and on and on and talked macro. We talked business. We talked branding. We talked it was amazing. So I'm really grateful for Robert. But my point is to interview guys like that. It's a bit surreal. And I enjoy it just as much as you guys do. So anyway, getting back to your question. My question is, are federal MILFs available for the average guy? I don't know if that makes sense. Maybe I just want a MILF. Oh, that's funny. So you're talking about one of these 4-letter bailout programs, or the Fed has instituted, or 5-letter bailout programs. The MILF program, which is how they came up with that acronym. Who knows? I always say, out of the 900 PhDs that Jerome Powell has around him, you'd think someone would have whispered in his ear, hey, the MMLF program, yeah, you might want to go with a different one than that. It's just, did no one bring that to his attention? But anyway, so I think if you go through the, maybe not the Fed's MILF programs, but the government and their stimulus packages that they're throwing out, there may be some relief for the average guy. And listen, someone's YouTube channel who's doing like 4 videos a day on these stimulus package programs is Meet Kevin. And I know a lot of people, a lot of my viewers don't really like Kevin too much, or might not like his content. I don't agree with him on everything, but I have a tremendous amount of respect for him as a YouTube creator. He is, from a creative standpoint, if you guys produce videos, you would understand the level at where he operates, and him and Graham and Marco from Whiteboard Finance. But Kevin is really a creative genius. He is, but that's a whole other discussion. The point is, he's been doing like 2 or 3 videos a day on these stimulus packages and how to get these checks the government is sending to people. So I would just refer you to his channel if that's something you may qualify for, or like an SBA type of loan. He's done so much more research on that than I've done, and I don't really get into that too much because I like to focus more on the macro side of things, not really the personal finance. So that's where I would go. Okay, Crypto King, thank you very much. Do you think oil still has more downside? You're asking the wrong question. That's not the question to ask, Crypto King. You know the question to ask. What is the question to ask? Everyone say in the chats. What see, this chat's a little slower, so I can't see it as fast. Anyway, okay. The question you have to ask, Crypto King, is oil cheap right now? Is it cheap? Don't worry about if it has more downside. Look at a historical chart going back 100 years, adjusted for inflation, and ask yourself, there you go. Sebastian, how the hell did you do that? I didn't know you could do that. That's cool. So now Sebastian is putting up all these comments. I can see Ben Hayek says it's cheap. All these, Pearl says it's cheap. That's right. Every cloud is oil cheap. So you guys are answering the super chat just as well as I can. That's cool, Sebastian. I didn't know it had that feature. Okay, try to put back, can you put the super chat back up? Or is this super chat? Oh, there we go. Okay, so does it have more downside? I think if I had to answer that question directly, from where it is today, yeah, I think it might have some more downside, but maybe 50-50. I don't have that much of a, I don't have that level of commitment or that conviction to saying, yes, it is for sure going down. I've got a lot more conviction if you're asking me if the stock market is going down or still has more downside. But as far as oil, I'd listen to Eric. Eric's going to know a lot more about it than I do. So Eric, my buddy Eric Townsend with Macro Voices, the podcast, I'm sure he's has some recent interviews where he outlines his view on oil. Or if you follow him on Twitter, he always tweets about oil. That's really his specialty. I would get his opinion. And but mine, just from a more broad stroke and what I'm doing for my own portfolio, is I'm just asking myself if it's cheap. And if it's cheap, I'm trying to find ways to play it, like through the oil producers that are paying a good dividend. Definitely not the USO. Don't buy USO. That's, if you don't know why I'm saying that, watch my video on it the other day. They don't own the underlying asset. They just own futures contracts. So if the curve's in contango, you're always having to roll it over at a loss, and there's a negative carry to it. That's not what you want. Okay. J.A. Galagos, thank you for the super chat. Sebastian, I answered this. This is when we were having problems. Okay, thank you. Boser Wolf, 1977. Thank you for the super chat. Just says, for the stiff drinks coming. Thank you, my friend. I appreciate it. Yes, stiff. I definitely think it's going to be stiff drink time over the next 6 months for the stock market, but we'll see. It all depends. Maybe the Fed comes in and buys everything and props it up. I could be totally wrong. We'll have to find out. It'll definitely be interesting, that's for sure. Oh, this is a good question. So, Beto, thank you for the super chat. What are the takeaways, or my main takeaways from Hugh's interview? The number one takeaway I think everyone should have is if someone, a guy or gal out there, is obviously incredibly smart, knows history, very well researched, open-minded, is intellectually curious, is more about concepts and ideas and just trying to figure stuff out. If they're more about that than they are just about pounding their chest, trying to say that, oh, I'm right, you're wrong, and just this nonsense, like what this political theater that we have right now in the United States, in most places, where if you're on the right, you have this belief system, and everyone else is wrong. I don't care what you say. I'm just going to sit here in my own little echo chamber with my fingers in my ears and just like a little kid, and I'm not going to listen to any of it. Same exact thing on the left, right? And I not that I'm political at all. You guys know I dislike both parties, and I dislike almost every politician. But from a macro standpoint, people do this exact same thing. Like if you're in the Austrian side of things, or if you're on the Keynesian side of things, or if you're an MMT guy or gal, it's weird. But we as human beings have this bizarre like tribalism, where we just like talking to people who have the same belief systems as we do. So that's the big takeaway I think people should have from Hugh's interview. Number one, the guy's a genius. He is flat out a genius. And he's so entertaining. And I know he is a little hard to follow because he uses a lot of macro terminology. But boy, if you can follow it, you really appreciate how in-depth his ideas are. And so and I think another thing that's impressive about money managers, especially who have done well in the past, is you see as they're thinking out loud how they never get married to a particular bias. They're always challenging their own belief systems with new information and studying history, right? So if you noticed when I was talking to Hugh, he was saying how he used to be kind of a Fed basher, just like I am. And he was a Fed basher all the way up until, I think he said 2012. And then in 2012, he kind of changed his ideas, and he just was given new information, and he just had a different way of looking at the exact same problem. That whether you agree with him or not, you have to appreciate that type of thinking and the ability to be open-minded and to challenge your own views. Like I was saying earlier, that is impressive. That is something we should all strive for on a daily basis. And I'm not saying that I'm a fan of the Fed now. I dislike the Fed just as much as I did a week ago. But it's really special to be able to talk to people that bring new information to the table, something you might not have thought about, so you can digest it, you can figure it out, and you can make your own belief system and your own arguments even stronger than they were before. It's a fantastic opportunity. And I think it's an opportunity that most of us don't exercise enough because of this human propensity we have to stay within our own echo chamber. And although I love talking to the guys like Kiyosaki, like Schiff, like Grant Williams, Mark Faber, Rick Rule, Doug Casey, all these guys that really we kind of see things the same way. I enjoy just as much talking to guys like Hugh and Steve Keen, and I respect them just as much. And so hopefully we'll be able to do a lot more with Hugh moving forward, and a lot more with Professor Steve Keen. Okay. Tama Tendon, if I'm saying that right. Thank you for the super chat. Hey, George, I own rental property. My tenants are leaving. Yeah, currently there is a moratorium on evictions, so I'm hesitant to continue renting. Should I sell or keep the income producing asset? Boy, Tom, it really depends on where the asset is, what type of neighborhood. Are you in a linear market? I don't know if you're comfortable disclosing where it is, but maybe you can tell Sebastian in the, I don't know how this software, if you can type it into the stream here, but it just depends. It depends what your cost basis is. I don't know if you've got any debt on it to where you've got a mortgage payment. Yeah, boy. Let me make some assumptions here. I'll assume that you got it in a linear market, that it's in a good neighborhood, that you're in an A, B neighborhood. You're not dealing with like C tenants. And I'll assume that you got a good cost. Oh, Denver. Okay. So you're in a hybrid market. Yeah, I'd sell. Yep. I'd sell. That makes it easy. Why would I sell? Because you're in a hybrid market there. And I just, a cyclical market or a hybrid market that's kind of becoming a cyclical market like Denver, boy, unless I got a smoking deal on it and it was like the home I wanted to raise my family. And I know when I talk about things, I just look at the math and the numbers. I don't really consider the kids growing up in a school or your wife or your husband or any of these things. So you've got to make those decisions on your own. I can just talk about it from a dollars and cents standpoint. And that said, I don't, there are other markets where I'd rather have my equity than Denver right now. So, and if the market is still good, I'm assuming you guys are still very short on supply there. I would sell, or at least I try to take my equity out. If you're someone that's comfortable with debt, maybe you're more comfortable doing a cash out refi and taking that cash out and then either keeping some dry powder based on what you think is going to happen in the market, or taking the equity and moving it into a more linear market, assuming you could get a really good deal. If you can't get a good deal right now, I'd be patient. I'd be patient if real estate's your thing. Okay, so, okay, Nicholas, thank you for the super chat. Hey, George, you mentioned a few weeks ago you were hiring. Yes, I was. What qualifications are you looking for? Thanks for all you do on your videos. So I already hired someone that's fantastic. I appreciate you responding and inquiring, Nicholas. We'll most likely hire more people in the future. We're not doing it right now, so you guys don't need to submit any applications to Sebastian. But maybe in 6 months, a year. What do I look for? It really depends on the position. Like, I wanted to really start focusing on the website, which we're in the process of changing, and do more I wanted to be much more proactive with Google instead of just YouTube. So like written content as opposed to video content. So I brought a guy on to do that, and he's doing a fantastic job. He's awesome. But I just look for people who are hardworking, who are self-starters. I don't like to really micromanage people too much. If you need micromanagement, it's probably not going to be a good fit. and also at this stage in the game, I'm looking for people who already have a specific expertise in something that where I'm deficient. So now in 6 months, a year, who knows what we could be looking for. So maybe if you're looking for a gig in 6 months or a year, maybe email Sebastian and see if we've got anything available. And Sebastian's email, we're changing Sebastian's email when we set up the new website. But for right now, it's georgegammon.contact@gmail.com. And Sebastian, if I said that wrong, correct me in the chat, if you will, please. Okay, do we have another super chat? Car Kook, thank you for the super chat. Hello, ECB keeping rates negative. Most mortgage payments are floating, linked to 6-month or 12-month Euribor, or is it LIBOR or Euribor? Okay. What future do you see for Euribor interest rate? I'm not familiar. I'm familiar with LIBOR. I'm guessing that might be close, but maybe I'm wrong. I can tell you what I think of interest rates or mortgages that are not fixed rate, and then I don't like them. It just, to me, that's not why you buy a mortgage, or that's not why you get a mortgage. You don't get a mortgage to gamble. You get a mortgage because it's cheap. You can fix the rate. You got positive cash flow coming in. So it's a very safe way to short the currency, whether it's yen, euro, dollars. I don't know. I don't really like getting a mortgage because I'm gambling that rates are going to go lower or higher. Again, it takes us back to asking the wrong question, right? You're asking the question, or you, I'm not saying you are, but in general, people might ask the question, are rates going lower or higher? So do I want to wait to get a mortgage for a year because interest rates might be negative, instead of asking the question, are interest rates cheap right now, or are mortgages cheap right now? So as far as what I see for the future of interest rates, timing for the next year, probably down while we're dealing with the cerveza sickness. After that, I mean, at some point in time, they got to go up. It's cyclical. The world runs in cycles. The economies themselves run on cycles. We've had a down cycle in interest rates for 40 years. 40 years. That is very long in the tooth. Typically, they're 20 to 30 years. So we're a decade overdue. It doesn't mean that we're not going to have low interest rates like Japan for the next 10 years. I don't know. But I do know things are cyclical. And at some point in time, interest rates will go back up. Whether that's a year, whether it's 10 years, I don't know. That's based on the probabilities of your own research. But my main takeaway, my main point is, let's see, you're floating too. You can't get a fixed rate. Yeesh. I just don't like that. I'm sure you're probably talking about your own personal house as well. I mean, that sounds crazy, but I think if I was in your position, and I'm not saying you should do this, don't get me wrong, but I'm just saying if I was in your position, I would probably sell. I would probably sell in Europe. I would rent. I would take my equity and I would try to get it into 30-year fixed rate debt in the United States. And I know it's pretty darn easy for foreigners to actually get loans, mortgages in the United States to buy rental properties. I know Hartman helps people do it all the time. So I would probably rather do that if it were me personally. I'm not saying this is right for everybody, and I'm not saying this is what you should do. I want to be very, very clear. I'm only saying this is what I would probably do. Probably sell, take my euros, get them into dollars, and then I would use that as a down payment or whatever to take out some prudent 30-year fixed rate debt in the United States at a very low interest rate. And when I mean prudent, I mean like a 50-60% LTV, loan to value ratio, and a linear market. But I'd keep dry powder. I wouldn't go all in. I'd be very, very careful buying right now. I'd probably do that with that game plan, but then I'd just be patient. I wouldn't dive right in. I'd wait 6 months. I'd wait 12 months. I'd do my homework. I'd see if I can get a good deal. And if I could get something that's really cheap, then I'd buy. But if I couldn't get something that's cheap, I would probably sit back with the assumption that over the next 2, 3, 4 years, things will probably at some point be cheaper than they are today as far as the housing market, even in nominal terms. And see, the reason I say I'm not adamant about not buying right now is because we could see home prices go down strictly in real terms, adjusted for inflation. So you don't want to hold a lot of cash if we go into an inflationary cycle, which we could, going back to MMT and the MILF programs, if you will, for the average Joe and the stimulus packages. I mean, I think they're up to like $2,000 a month. And I especially if Biden gets into office, I think you're going to see UBI for sure. So that's what I would do if I was in your position. That's what I'd think through. Katushiro, thank you for the super chat. Do you think about investing in food for seeing upcoming price rises? And what instrument do you recommend? Food producers, stock, fertilizers, seed producers? Yes. I think you're on the right track. And this goes back to the video that I'm preparing for tomorrow. And this is one of the things that I'm going to suggest people think about if they want to go long volatility. If they want to set up their own little mini dragon portfolio, I think this is a great place to start for going long vol. As far as specific, I think the fertilizers could be good. Depending on if they're cheap. Like I haven't looked at the chart, so I don't know if they're cheap right now. But what I would be doing is I'd set up a watch list, right? Just like I talked about in March, where I was looking at oil producers, Dutch, Exxon, Chevron. I was looking at the Carnival cruise line back then. And so not that I was pulling the trigger, but I just want to set up a watch list. Just pay attention. What are these things doing? And if you can get some that are cheap, I think that could be an interesting way to play the next 10 years, for sure, for sure. Okay, do we have any more super chats, Sebastian? Yes, neurosurgery. Thank you for the super chat. Thanks for doing this work. No problem, my friend. Thanks for being on the super chats. I always see you on here in the comments. I really appreciate you taking time out of your schedule to tune in. Heard Mr. Sinclair said the low demand for capital due to the collapse of economic activity with the cerveza sickness, blessing to Fed to control repo. What do you think? Okay, let me walk through this here. Heard Mr. Sinclair say the low demand for capital, okay, due to the collapse of economic activity with cerveza. Oh, I see what you're saying. Let me rephrase this so people can follow this question. So if there's less demand for capital, then there's less demand in the repo market. So it kind of bails out the Fed in a sense, or it gets them out of a pickle where the Fed doesn't have to be as active in the repo market because there's not as much demand for repo transactions, because there's less demand for capital, less demand for liquidity, because there's less activity with the cerveza sickness. That's really the bottom line. I don't know. I don't know if I'm fully on board with that analysis. I'm not sure the reason why the Fed has had to be less active in the repo market is because there's less demand for liquidity and less economic activity. I don't know if there's a direct correlation between repo transactions and economic activity. I know there's a big correlation between repo transactions and instability or volatility. It would almost seem as though if there's more economic activity, I think it might go back to volatility though, regardless of whether there's a lot of economic activity or low economic, it's all about the need for liquidity, which I think has more to do with instability. It's a great question for Jeff Snyder. So I'm not sure I totally buy into the argument if I'm reading it correctly. I think the reason the Fed has had to be less active in repo is because they've just pumped so much liquidity into the system through all these other mechanisms. Or, and I know Jeff Snyder would correct me on that, Jeff would say the Fed has made people believe psychologically there's so much more liquidity in the system, or made people believe that there's a Fed put, that they're more willing to provide the liquidity. Therefore, the repo market settles down. But let's not forget the repo market was broken. The repo market's been broken since 2008. Not just, it has nothing to do with the cerveza sickness. And we saw it, and we just periodically see it coming to a head where we look at the repo market and say, holy cow, look at what just happened there. And we assume that it's just this isolated instance, but it's not. It goes back to Jeff's work that he's done on the euro dollar, even pre GFC 1 in 2008. If you the line in the sand, and I totally see this, I agree with Jeff because what he's saying makes so much sense. The line in the sand is, I forgot the exact date, but he's got a chart on it that shows Fed funds and LIBOR. And you see them just go boop and completely split. And it was, I can't remember if it was April in 2008, but they just track right along the same line the entire time preceding 2008. And there's just this line in the sand where they completely split. And that was the fracturing of the euro dollar market, where Raoul Paul says that dollars weren't fungible anymore. And what he's referring to is that a dollar or a euro dollar outside the United States just isn't the same as a domestic dollar, right? And I know that gets technical. That's a whiteboard video in and of itself. But that was really the split. That's when the euro dollar system, or the dollar. And so what am I talking about? The euro dollar system was the mechanism that provided dollar liquidity for all of the dollar funding markets inside and outside the United States. So when the euro dollar system broke in 2008, since that time it's never been fixed. And it was unstable to begin with. It goes back to Bretton Woods. So Snyder's point is that it's never been fixed. We've just papered over it. The Fed's just put a Band-Aid over it. And that's why we see these periodic spikes in repo, and that's why we saw September 17th. So nothing the Fed has done or the economy has fixed the repo market. Nothing they have done has fixed the euro dollar market. It's still just as broken as it was in 2008. So we will most likely continue to have these flare-ups in the repo market, and they could get a lot worse, which could have a lot more systemic risk for the system and the economy as a whole. But my point, I went off on a tangent there, but my point is I think the mellowness in the repo market, or the calming of the repo market, it has more to do with the market forces being willing to provide more liquidity, which is just temporary, and less to do with the cerveza sickness or economic activity. Okay, do we have a Emilio? Thank you for the super chat. Are there any major U.S. banks too exposed and at risk of going under? Well, I think a lot of them are at risk of going under, but let me clarify. I think they're in a much stronger position than 2008. And I'm not saying they can't go belly up. They can't go bust. I'm saying they've got a heck of a lot more reserves right now. Their balance sheet, from what I've seen, is a lot more stable than it was in 2008. That said, their balance sheet comprises of a lot of assets that have to be marked to market. So just because their balance sheet looks pristine today, because the asset side of their balance sheet has so predicated upon debt instruments and the markets as a whole, if the markets tank, their balance sheets could go from being pristine to in deep trouble. So I think Schiff talks a lot about that. He makes some very good points. So I don't know if they're too exposed. Everybody right now is at a risk of going under. I mean, except for maybe the government. I think every business out there has a risk. It's just a matter of what the probabilities are. And I think the probabilities are pretty low with the U.S. banks. Number one, because I think their balance sheets are a little bit better. And I'm talking about U.S. banks. I'm not talking about outside the U.S. But number two, I think the Fed's just going to bail them out. And let's be honest. Wells Fargo, B of A, JP Morgan, Goldman Sachs, if they get into trouble, the Fed's going to come in or the government's going to bail them out or something. But that's not a reason to invest in them. You don't invest because you think there's going to be a bailout. But that's my opinion on the U.S. banks. Okay, Sebastian, do we have another super chat, buddy? Sanjay says, and Sebastian, I don't know how many super chats are in the queue. I think you can see how many there are. But if there's more than like probably 4 super chats, let's go ahead and do the announcement thing to cut them off so I can make sure I can get to lunch. Oh, there you go. Cool. How awesome is that? We got like a little ticker sign or symbol or a little ticker thing. What is that called when the ticker symbols stream across there? I'm not sure, but that's really cool. So please, no more super chats. Okay. Let's go back to Sanjay's question. Silver has been moving parallel with the S&P since February 23rd. Am I right to wait for the markets to fall, silver going along with it, before parts ways? Guys, what are we going to tell Sanjay? Everybody knows. Everybody knows. Oh, Sanjay, got to ask yourself, don't get into the mindset of trying to figure out the price of silver, whether it's going up or down. Try not to do that, buddy. I know it's hard. I fall victim to it myself, but just try to ask yourself if it's cheap and just ignore what it's doing with the market or what the price may do. So to answer your question more specifically, I don't know. You're not right because you're asking the wrong question. But number two, I think you're looking at the stock market going down, therefore these big players having to come up with a lot of liquidity. And if they can't come up with the liquidity, they're going to sell anything they have in their portfolio that is liquid, meaning precious metals, or maybe in Bitcoin. And that's why when you look at 2008, or you look at this past downturn, you see the price of the precious metals selling off substantially. And I think it's a little tough because the collateral issue in the dollar funding markets may have been, I'm not going to say they were solved, but they could have been papered over. They may have a Band-Aid now that they didn't have before. And if they have that Band-Aid, just because the market crashes doesn't necessarily mean that silver will go along with it this time. So I would look at a chart that Jeff Snyder has on his website. I forgot which blog post it is, but he goes through 2008, what happened with the price of gold and what was happening in the repo market with the repo fails. And you can see that there's kind of an inverse correlation. So I would look at the repo fails on the Fed's website and see if the repo fails are trending higher or lower. My guess is they're trending lower, which would be bullish for gold and silver and would imply that there is a higher probability of silver and gold not responding to a big crash in the market moving forward. Hopefully that makes sense. All right, Green Dude, thanks for the super chat. Any places you can get a tiny 21 square meter or so apartment for less than 10,000 USD in cash? Yes, there is. There is. It's tough. And there's actually some places where you can go to a really nice area, like a super nice area. Most people don't know, and this is why you got to have the insider info. This is a good insider info tip right here. In Medellin specifically, we have different zones and they call them stratas. So, and you pay your utilities and whatnot based on what strata you live in. So the highest strata where all the rich people live, that's strata 6. The lowest strata, which would be kind of the ghetto areas, if you want to use the US terminology, that's going to be strata 1. But if you go into an area like Poblado, which is like the Scottsdale, if you guys are familiar with Arizona, that would be Scottsdale. If you're familiar with LA, that would be Beverly Hills. That's what Poblado is. There are pockets, little teeny neighborhoods. And when I'm talking about a little teeny neighborhood, I'm talking about like 3 square blocks that are actually strata 2. And for whatever reason, whether it was zoning laws or I don't know, but these little strata 2 areas, these little 3 block squares were never developed, and they're still strata 2 inside this huge area that's strata 6. So you're almost walking there's a couple of strata 2s I know of that you would probably never find, but I know where they are, so I can walk right to them, that are just walking distance from all the major features or areas I spoke of earlier, like the Golden Mile, like Parque Aras, like Provenza, like the Tesoro Mall, which is like one of the most amazing malls you've ever seen in your life. Think like South Coast Plaza in Orange County. And you're walking distance to all those. So you could potentially find an apartment. You might even be able to find a bigger apartment than 21 square meters for 10 grand. Because you got to remember, your 10 grand is going a long way right now because the exchange rate's like 4,000. So, I mean, you got a lot more purchasing power than you did just like 2 months ago when it was at 3,000 roughly. So, I mean, 10 grand is like, that's almost 40 million pesos. Yeah, I'm just thinking through this out loud here. You might be able to get an apartment there for 10 grand. 40 million. I'm just kind of going back and forth between USD and pesos. Yeah, so the problem here is going to be that those people that own the apartments in there, they don't have any mortgages on them because they've just been passed down from generation to generation, and they don't want to leave because they know that if they took your 10 grand, okay, now what do? You can't buy anywhere else. So how do you get to your job? Like that, they can't rent a place because that 10 grand isn't going to last them forever. So they don't want to sell. So it's very difficult to find places for sale, but it's not impossible. If you came down here and just walked around the strata 2 areas that I'm referring to, and it might take you a year, but eventually you're going to find someone and they're going to know you. They're going to get to know you as that gringo guy or the green dude or whatever. And so you're going to start getting deals where, hey, oh, you know what? My grandma's selling. That's how you got to find deals in South America. There's no MLS. There are websites, but those are just gringo prices. To get the really good deals, you got to network. You got to be slick. You got to be out there looking and bird dogging all the time. And it is possible for sure. Not just now, there's other areas in South America where you get that easy. Like Ecuador, there's places where you don't even have to look around for it, but it's not going to be that nice. I'm talking about Medellin, which is, I don't know if you've ever been here, but it's I promise you, if you came to Medellin, you would be like, wow, why have I not come here before? It's one of the nicest cities I have ever been to. And I've been to over 40 countries. I've been to every state in the US. I've been all over Europe. I've been to the Middle East, Australia, you name it, Singapore. And Medellin is one of the nicest cities I've been to. Now, of course, they've got bad parts, but the area where Poblado or Provenza, it's just absolutely gorgeous. Gorgeous, gorgeous, gorgeous. So my point is your standard of living would probably be substantially higher than it is wherever you live right now in the States. Let's say you live in the Midwest, or you live in LA, or you live in even like if you live in Phoenix. I think the standard of living is substantially higher here. So I think it's a great idea, and it's definitely doable. That's the bottom line. All right, Sebastian, what do we got next, buddy? Jonathan, thank you for the super chat. What do I think of the Swiss franc? Better than USD or the euro? Yeah, I do. I think so. I don't really like any fiat currency, but if I have to have something, I would say that I like it better. Long term. Short term, maybe the USD might be better, but longer term, I would prefer to have Swiss francs. Okay. Nicholas, thank you for the super chat. Bitcoin, are you waiting to buy the dip? Ryan Phillips, what could happen to the price of GLD relative to gold, given the speculative components of the ETFs? Okay, it looks like this might be 2 separate questions. So let me attack the Bitcoin question. Yeah, I tweeted out just last night that I was worried. And you guys know me. I'm not a big trader guy. I don't really like to gamble on things. I just like to buy stuff and hold it for 10 years. If I would have been a trader, and if I don't know how to do it, but I would have probably bought Bitcoin like a month ago, and I would have sold it like just before the halving. I would have sold because it's too obvious, right? When something's that obvious, and every single person on the internet is talking about it, and it's going to be a buy the rumor, sell the fact type thing. It doesn't mean that I'm not bullish on Bitcoin long term. I don't think it's a great asymmetric speculation. I'm just talking about what happened over the last month. It's just kind of a pretty obvious. That would have been an example of Jim Rogers saying that there's some money in the corner. All you got to do is go pick it up. I just didn't go pick it up because I've got to wait for even easier money than that, in my opinion. But so when would I buy Bitcoin? I don't know. I just, it's hard because there's not really any fundamentals. I think personally, I'm going to wait until if it maybe goes down to 7, 8. I hate to really look at charts to do that. And then you got to, are you buying it cheap? Well, I don't know. That's the problem with Bitcoin. I can't really answer my own question. But just for a wild speculation, I'm not going to say a wild speculation, just a speculation that I'd only allocate a very, 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 very small percentage of my portfolio. I would probably buy it like 7,000, something like that, wherever it was prior to everyone really getting excited about the halving, whatever price that was. That's probably where I'd look to go in. Okay, as far as Ryan's question, I think, Sebastian, can you go to that last? Yeah, thank you. What could happen to the price of GLD relative to gold given the speculative components of the ETFs? I don't know if. I think the only way you're going to see something really explosive in the GLD is if there is some really shady stuff going on with HSBC. And technically, they're supposed to have the gold to back up the ETF. It's not like USO where they don't even have the oil. They just have a futures contract on the oil. Technically, HSBC is supposed to have the gold. It depends on how conspiratorial you want to get. I don't really trust it. I like Rick's deal where Sprott, where he has the custodian of the gold that they have in the fund is the Canadian Mint. I trust the Canadian Mint a little bit more than a lot more than I trust HSBC. But that, as far as the way the ETF is structured, I don't know if there's a big risk there. There's always risk, but I don't know if there's a huge risk there. I think your risk more comes into the solvency or maybe the shady dealings with HSBC. Okay, cool. Ready for the next super chat, Sebastian? Could the price of the two deviate, and if so, in which way? The price of gold and GLD? Oh, yeah. The prices of ETFs deviate all the time. Now over time, they tend to track. But for sure, you could get more demand for the shares of the ETF, which drives the price of the ETF higher than the underlying asset, or vice versa. And that's when you have the market maker come in, and it's their job to provide the liquidity and to either sell when the price is getting too high or buy when the price is getting too low, and then go ahead and take those funds and then buy the underlying assets. So you get this kind of equilibrium effect. So yeah, for sure, you could have small deviations all the time, but if the fund is run well, then, and if the underlying asset is really there, that's why USO, it doesn't really track oil too much, because they don't have the underlying asset. But something that tracks, that owns the underlying asset, that's supposed to own gold, it should track pretty, over the long run, it should stay pretty consistent. But there are fluctuations in the, on a day-to-day basis. In which way? Both. They can be, it can be, the price of the ETF can be higher and it can be lower, depending on the demand for the shares of the ETF. Okay, Sebastian, do we have Donnie? Thank you for the super chat. George, do you know of any failed jurisdictions, decentralized legislatures, are a way to clean up failed governance with smart contracts? Free book at the null hypothesis of politics.com. I don't. So I would take this question a little bit different path than you're trying to go, because I think what you're trying to do is you're trying to go down the path of the Bitcoin ledger system, like a decentralized ledger system, or like an XRP type thing, because you're using that terminology. I see this a little different. I don't know. There could be some huge opportunity there for those types of technologies to make a big difference. But I see things like Jim Rogers, where I look for failed jurisdictions or failed states as an opportunity to go in on the long side. And if you remember the conversation I had with Jim, he gave us some great golden nuggets about his experience in going into states that have just, or countries that have just, where there's blood in the streets, where they can't get any worse than they are. And some of the things that I really took away from that conversation was, generally, when you get rid of the bad guy, the next guy isn't that good either. So remember what Jim said? If you bet on the next guy, you really shouldn't do that, because generally there's so much volatility and it's so tumultuous that if you bet on the second guy or gal, you're probably going to lose money there. Where you try to bet on the second or third, I think was his point. And then he always said that when typically, in his experience, when you go into a failed country, or when things just can't get any worse, and you buy once you see some sort of political stability, and that is his catalyst, right? When he's done that in his career, this goes back to the 1960s, mind you, over the next 5-6 years, he does very well. And I think that would be my main takeaway, is looking for opportunities on the long side when there's blood in the streets, just because there's blood in the streets, not necessarily because there's a huge opportunity to come in with smart contracts or some sort of ledger system, or XRP, Bitcoin, something like that. And also on that note, I want to point out to people that when I say Jim does extremely well, or he has done, mind you, he doesn't. When you buy a Venezuela, let's say in its current condition, and I'm not saying that you should, because who knows what's going to happen once Maduro's out. And to Jim's point, the next guy could be worse. You got to wait for maybe the next guy or gal. You got to have some catalyst there, which obviously we don't have. But when Jim talks about doing extremely well over the next 5 or 6 years, he's not talking about Venezuela going from Venezuela as it is today to the UK, or going to the United States, or even Colombia, or even Argentina or Brazil. He's not talking about that. He's talking about it going from absolutely horrible, horrific, to just bad. And if you study history, you'll find that the returns are far greater when you go from horrible to bad than when you go from good to great. When you go from good to great, you might make a 50% return, 20% return, maybe 60, 80% return. But when you go from horrible to bad, that's when you get the 2,000% return, the 10,000% return. And that is, Jim, I don't know if he'd ever articulate it this way, but in my opinion, studying his career, that's why he has done so well. Because whether it's conscious or not, he has set up his portfolio to where he has all these extremely asymmetric trades that he rides over the long term, and he only has to get like 30% of them right, if that. Jim's trades are so asymmetric that he probably only has to be right 10% of the time. And because his downside is so limited when he's wrong, because he's buying at just the absolute low and it can't get any worse, and his upside is 10,000%, you see, he doesn't have to be right he doesn't even have to be right maybe 20 or 30% of the time, because of the asymmetry in betting on things going from horrible to bad. So, I mean, that's one of my biggest takeaways from Jim Rogers' career. And that's why I try in my own little way just to do the same thing. That's why I came to Colombia in 2015 when I saw that oil was under 30 a barrel. And I still try to take that mentality. I can tell you right now, in my investing career since 2012, I've been very fortunate to make a lot of money. And I've made money on the majority of my investments. And that's because I took an insider approach, like Jim talks about and like Robert Kiyosaki talks about, only sticking with what you know and being an insider and investing that way. But I have lost money on a couple of my we'll call them speculations. And let's say I've lost money 1 out of 10 times and I've made money 9 out of 10 times. That's probably the actually pretty accurate. The only times I've lost money is where I've tried to time something going from good to great. Almost every time I've done that, I've lost money. Every time I've tried to time something going from horrible to bad, I've made a killing. So take that for what it's worth. Okay, do we have any more super chats, Sebastian? Oh, are you kidding me? Are you kidding me? Everyone can see this question, can't they? Stay curious. I didn't know you're from KC. Listen, if you guys like barbecue, if you're a fan of barbecue, and I know it's a lot different, and even Americans might not know this. The barbecue in Kansas City is a lot different than it is in Texas, and it's a lot different than it is in the Deep South. What's the place in Kansas City? It's oh darn it. It's the place, and stay curious. Tell me in the chat. Remember, it's the place. They probably got 5 of them, and it's the most Gates Barbecue. That's right. Where you walk right in the door, and they go, "May I help you?" And they just they scream at you, like right when you walk in the door. You're like, "Whoa, whoa, whoa!" You're kind of not expecting it. Yeah, Gates Barbecue is where I like to go, and I'm in fact, I'm extremely kind of health conscious the way I eat. I just like organic food and vegetables. So I don't get into the barbecue. But every time I go back to Kansas City to check on my rental properties, I definitely make sure that I take at least one trip to Gates Barbecue. Because to your point, it is fantastic. Man, is it good. Whew, it is really, really great. So for those of you who are who like barbecue, next time you're in Kansas City, if you're staying down at the plaza, if you go right between Uptown and the plaza on the main drag there, I forgot what the name of the road, there's a Gates Barbecue right by the Home Depot, right there. Check it out. You will thank me that you did. I can promise you that. Okay, Sebastian, do we have any super chats, buddy? Any more? Okay, Phil, thank you for the super chat. I own a mortgage-free condo in Vegas, bought 2010. Great. Good for you, buddy. You probably did really well on that. Neighborhood is getting a little ghetto, so I want to buy a house. Okay. Thought Vegas housing, best time to buy or sell. Surprisingly, Vegas is not as overinflated as it was. It's not one of these like LA, Seattle, Portland, Boston. It's expensive. Don't get me wrong. It's not cheap. But it's not as bad as it was in 2006. So that said, I'd rather have my equity in a more linear market. But if you're only considering Las Vegas, sounds like maybe for your family or something. I would consider selling now. Yeah, I mean, listen, what's your upside? Like you've got to look at it from your upside downside. So say that the market goes up. Okay, what's the maximum you think the market could go up over the next 2 years, considering we're going to probably be dealing with the cerveza sickness on and off in some capacity for the next year at least? I mean, what is it, 10%? What's your downside? 30, 50? So is it worth taking the risk for a 10% upside with a 50% downside? That's not the asymmetry we want. So I would prefer, if you're kind of thinking about selling anyway, I would sell now, keep some dry powder, rent, and then just to try to find a good deal. And if you can't, just be patient. That's what I'd do. And by the way, my mom is a real estate agent in Vegas. So if you want her information, if you want to use my mom as your real estate agent, and I can tell you, she's thorough. She is super, super thorough. You think I'm thorough on the whiteboard videos? You should see my mom. Whew. But anyway, if you're interested in calling my mom, seeing what's available, or getting her opinion on it, she knows the Vegas market a lot better than I do. Just shoot an email to Sebastian, and I'll have Sebastian get you my mom's email address. Oh, there it is. Yeah, it's on the ticker thing. Very cool. georgegammon.contact@gmail. Okay, Sebastian, do we have any more super chats, buddy? Baxter, should Joe Exotic be pardoned? I don't have an opinion on stuff like that. I don't really know too much about it. I don't know enough about it to give you an opinion. All right. Do we have another? Okay. Wally, thank you for the super chat. Isn't it a given that oil futures are going to go negative again on the 19th because they haven't figured out the storage as the bottom line? I don't know if it's a given. It's not nothing's 100%. I know that Jim Bianco and did a macro voices with Eric the other day, maybe a couple weeks ago, where they addressed this. I'd highly suggest that episode. It's just maybe 15 minutes. It's a real quick. But I mean, they may not. But again, I really wouldn't worry about it too much. I don't know, unless you're just curious. But as far as from an investing standpoint, I mean, whether it goes negative or not, I don't really think it matters because oil is just cheap. It could be cheaper, but it's cheap, and that's all we need to know right now, in my opinion. Okay, Sebastian, do we have any more super chat? All right. Jay Tholick, thank you for the super chat. Long volatility portion. Is it a short-term trade? No. Less than 1 year or more of a long-term trade via options. Also, it's also the VIX. Yeah, so there's some products that try to mimic the VIX, but they have a negative carry. That's the problem. And no, to be clear, when Chris talks about the Dragon portfolio and not and having a component of it, I think 21%, in an asset that does well with volatility, so being long volatility, he's not talking about this having a portfolio set up for the next year. He's talking about a portfolio set up for the next 100 years. 100 years. So in any of these products that try to mimic, or even the funds that try to mimic the VIX, you can't hold that for 100 years. You're going to get wiped out. You're going to get wiped out after 5 years because it's got a negative carry, just like the USO. So even if you do have temporary spikes, if you don't sell during those spikes, or if your timing isn't perfect, you're going to lose money. So it's about going long volatility with a positive carry. That's the trick. And that's why it's so hard. Now, Chris has figured this out because he's a genius. and he knows these things. He's a pro. I'm not a pro. Most of the people on my chat right now, they're not pros. And a lot of people might not be accredited investors to where they could just invest in Chris's fund. Now, if you are an accredited investor, I would strongly suggest looking at Chris's fund for sure. In fact, I might do that. That might be a good idea. But if you're just a normal retail investor, then that's the problem. You know, you don't really know options. Another thing I was thinking about doing is a webinar with Patrick. That last webinar we did was extremely popular. And I was thinking about doing a webinar on options, just having Patrick walk us through how to be long volatility with a positive carry. And so if you're interested in that type of webinar, send Sebastian a chat. And if we have more than like 20 or 30 people interested, then I'll phone up Patrick and see if he's got time to do a webinar on that. But going back to my original point, you look at farmland, you look at one thing I was thinking about that I'll include in tomorrow's video for going long volatility would be AutoZone. Like, think about that. And I'm not saying go out and buy AutoZone right now, or I'm not saying O'Reilly's might be better or whatever. I'm just talking about an auto parts chain. But I'm putting AutoZone on my watch list. I'm not buying it now. It could be wildly overpriced. It could be expensive. But I'm putting it on my watch list to wait until or if it gets cheap. And then I might be a buyer, because I would see AutoZone as a way to go long volatility. Because if we have this hawk cycle come in, regardless of whether it's an inflationary hawk cycle or a deflationary hawk cycle, it's going to create a lot of economic pain. Remember, we can have an inflationary depression just as easily as we can have a deflationary depression. It doesn't necessarily have to be deflation. But the bottom line is the economy in real terms is contracting, and you're experiencing a lot of pain. The hawk has to come in and wipe out all the malinvestment and the misallocation of resources that the serpent cycle brought into the system. In that type of environment, I don't see how auto part stores don't do well. Maybe I'm wrong, but that's something I'm thinking about. I'm going to include it in tomorrow's video. What about check cashing places? You can love them, you can hate them, but I mean, isn't a check cash or like a payday loan? You know, the check cashing places always do those payday loans. That's what I'm referring to. So if, regardless of whether we have an inflationary hawk cycle or a deflationary hawk cycle, or if we have massive political or social unrest where we see a lot of volatility in the markets, I mean, to me, that means higher unemployment. That means check cashing payday loan places might do well. So maybe that's a way to go long volatility, a way that just us average Joes and Janes can figure out and do pretty easily. So anyway, that's video tomorrow. It's not going to be like it's not going to be brain surgery where I try to go and figure out the repo market or the euro dollar or something that Jeff Snyder's talking about. It's just going to be very simple, very straightforward. Here's what I would suggest. Here's the Dragon portfolio. Here's the Hawk portfolio. And here's some things that you might want to think about. Okay, Sebastian, do we have any more super chats, buddy? Is that it? Sebastian, send me a private chat thing if that's it, or just tell me if that's it. Oh, there we go. Oh, no more super chats. Okay. All right, guys. Well, thank you very much for being a part of this inaugural super chat or live stream with the StreamYard software. Very, very cool. I'm impressed. This was awesome. So let me know in the comments if it froze or if we had any of those issues, or let me know. I don't know if it looks the same on your end or not. If you guys could let me know in the chat, I would greatly appreciate it. And keep in mind, if you're interested in KATUSA Research, definitely you want to take advantage of this because it's a super low price. It's a great offer. And I think it's the lowest price they offer. So if you're not interested in research letters, this isn't a sales pitch to buy it. This is only if you've thought about it in the past, and only if you buy it for the right reasons. Going back to the initial conversation, or the initial part of the live stream there, you got to buy it for the right reasons. But if you fall into that category, definitely a great time to do so. I will put an affiliate link in the description of this video, and then you can go to georgegammon.com, click on the resources newsletter, and you'll find an affiliate link there as well to take advantage of that awesome promotion. Okay, so everyone is saying that it's all good. You rock. It was smooth. Great. Fantastic. Did you guys, was it different on your end? Like, did it look different or did it look the exact same? Thanks. Okay, Jim's saying he likes the new live stream. Okay, cool. Good chat. I guess it does look a little bit different on your side because you guys saw the super chats pop up on the actual screen, and you can see our little Rebel Capitalist logo. That's kind of cool. Oh, so it is definitely a new look. Okay, good. We could see the questions. Yeah. So David, thank you. Miguel is saying that it's pretty similar to the previous. D is saying that they loved it. Okay, Chuck is saying that he likes the questions being up on the screen. Okay, good. I appreciate that feedback, Chuck. Just a little pop-ups with the names. Yep. George, you need to interview Mark Faber in Thailand. You know, I've actually thought about that, Daniel. Daniel, thanks for bringing that up. That's the thing. I knew at the beginning of the live stream, I forgot to tell you guys something. I knew it. I got to start writing this stuff down. But Sebastian set up a new YouTube channel for us. And we haven't posted anything, so I'm not going to give you the name yet. But it's going to be a YouTube channel where I post all the content that doesn't really apply directly to the main channel. So it's not a whiteboard video. It might not be a full-length Rebel Capitalist show interview, but it might be behind the scenes. It might be a vlog. It might be real estate stuff that I do. It might be the clips, like the shorter clips of the interviews. And we set up a whole new YouTube channel for it. So we're going to try to get that up and going this week. And when I do, I'll let you guys know. But you're going to love it. It's going to be really cool. It's going to have, if you want to see kind of, and of course, we'll be uploading a lot more when we get done with the cerveza sickness. But if you guys want to see more about kind of my day-to-day stuff and what I do behind the scenes and with the real estate investing, you're definitely going to want to subscribe to this channel. You're going to love it. But going back to your point, one of the things I thought about doing is traveling around and going to Vladivostok, if I'm pronouncing that right. If you guys watched the Jim Rogers interview, remember he said that's his two favorite cities in the world right now are Medellin and that port city in Russia. I was thinking about going there because I'd love to check it out, see if there's any investment opportunities, and turn it into a vlog, like a 2 or 3 part vlog series where I give you guys my impressions on potentially investing in this Russian port city that Jim is so excited about. And along those lines, I was going to try to set up my route to where I'd go to places like Thailand and go say hello face to face with Mark Faber and guys like that, maybe Grant Williams, and just have a sit down conversation we do with them and just talk back and forth and film the entire thing and upload that to the next George Gammon type channel we do, that second channel. So let me know what you guys think in the chat if you would like something like that. I'm definitely excited about doing it, that's for sure. And so, guys, appreciate your time. I'm going to check out. But keep in mind, you guys, if you keep writing in the chat stream, when I get done with lunch, typically on Sundays, I go back and read your comments at the end just to try to get some I'll just try to get your feedback and try to improve the future episodes and the future live streams. So have a great weekend, guys, and I will see you on the next video.